Quick disclosure before we start. Some links in the description may be affiliate links, which means we may earn a commission at no extra cost to you. Full details are at landedcanada.com/disclosure. If you moved to Canada recently and you have not filed your first tax return yet, this video can save you stress, time, and possibly money. Many newcomers think taxes only matter if they worked a full year or if they owe money. In Canada, filing a tax return is also how the CRA checks many benefits and credits. Even if you earned very little, filing can help you receive payments like the GST, HST credit, and if you have children, the Canada Child Benefit. First, understand this: Canadian tax is based on your tax residency, not only your immigration status. The CRA usually considers you a newcomer for the first year you are a resident of Canada for income tax purposes. For many people, that starts on the day they begin living in Canada and create residential ties, like a home, a spouse or dependents in Canada, a Canadian bank account, a provincial health card, or a driver's license. So if you arrive partway through the year, your first return is usually a partial year return. You report your income from the date you became a Canadian resident to December 31st. For that resident period, you report world income in Canadian dollars, not just Canadian income. Before you became a resident, you generally report only certain Canadian source income, such as employment income earned in Canada. If your situation is complicated, use the CRA newcomer pages or ask a qualified tax preparer. Now, what do you need before filing? Number 1, your SIN, your social insurance number. If you requested a SIN but have not received it before the deadline, the CRA says you should still file on time, but you may need to file on paper and attach a note. Number 2, your tax slips like T4 for employment income, T4A for some other income, T5 for investment income, and T5007 for certain benefits. Employers and financial institutions usually issue slips by the end of February. Number 3, receipts and records. Keep documents for childcare, medical expenses, donations, moving expenses if they apply, rent or property tax where relevant, and any self-employment income and expenses. The normal filing deadline is April 30th. If you or your spouse are self-employed, the filing deadline is June 15th, but any tax owing is still due April 30th. If you owe money, file on time even if you cannot pay right away. Filing late can create penalties and interest. Filing on time protects you. Most people should file online using CRA certified tax software through NETFILE. You do not need a CRA My Account to file online, but after your first return is assessed, CRA My Account becomes very useful. You can see your notice of assessment, benefit payments, tax slips, direct deposit, and future tax information. With direct deposit and online filing, the CRA says refunds can arrive in as little as 8 business days. When you file, watch for these newcomer specific details. Enter the date you became a resident of Canada for tax purposes. Enter your spouse or common law partner's information if you have one, including their net world income when required because family income affects benefits. If you own foreign property costing more than 100,000 Canadian dollars at any time in the year, check whether Form T135 applies. Also remember that RRSP deductions usually depend on RRSP room created from previous Canadian earned income. So many newcomers do not have RRSP deduction room in their very first year. The biggest money mistake is ignoring benefits. New residents may be able to apply for the GST, HST credit before filing their first tax return. After that, file every year so the CRA can continue calculating eligibility. If you have children under 19, look at Form R66 for the Canada Child Benefit. These payments can be meaningful, especially in your first year when cash flow is tight. Here are the 5 mistakes to avoid. 1. Not filing because you only worked a few months. 2. Forgetting foreign income from the resident period. 3. Missing the arrival date on the return. 4. Waiting too long to apply for newcomer benefits. 5. Falling for CRA scams. The CRA will not demand payment by gift cards, cryptocurrency, or aggressive threats. If a message scares you, log into your CRA account directly or call the CRA from the number on canada.ca. After filing, you receive a Notice of Assessment, or NOA. Save it. You may need it for loans, rental applications, mortgages, vehicle immigration paperwork, and future tax planning. If the CRA changes something, read the explanation carefully. If you made a mistake, you can request a change after assessment. Your first Canadian tax return does not have to be scary. Think of it as setting up your financial identity in Canada. CRA records, benefits, refunds, direct deposit, and your yearly paper trail. If this helped, subscribe to Landed Canada. Next, Watch our guide on building your Canadian credit score from zero, because taxes and credit are two of the biggest systems newcomers need to understand fast.